Hello and welcome to Bloomberg Quint. Today we are talking with the management of Ceat. Remember, the entire auto sector growth is complementary for auto ancillaries like Ceat, which are in the tired segment. Of course, in the last few months, we have seen the two-wheeler space also doing strong double-digit growth, at least in the listed space. To talk more about the growth outlook and the financial performance moving forward, we have Mr. Subbiah Kumar, CFO at Ceat, joining in. Thank you, Mr. Kumar, for speaking to Bloomberg Quint and taking out your time. Let me touch upon the topic, of rubber supplies. Generally, what kind of a rubber inventory does Ceat maintain? And, given the fact that the ongoing situation in Kerala is slightly disruptive, is, rubber supply a cause of concern right now for a company like Ceat?
See, normally rubber inventory is linked to what percentage is sourced locally and what percentage is imported. Okay, our inventory, physical inventory, could be approximately about 3 to 4 weeks in the normal course, and it will have a mix of both imports as well as local. As regards supply issues, we are facing some supply issues, particularly from Kerala in the last 2 to 3 weeks or so, arising out of heavy rains, leading to production stoppage there. And we hope things would improve in due course. We understand that the situation is better now, and hopefully planters will start tapping rubber again, and the supply situation should improve.
Okay. And so what about the rubber prices outlook? Do you expect they will remain, at similar levels moving forward? In general, we have seen slight softness. So do you expect the range to continue for the next coming quarters?
See, you have to look at local prices as well as international prices separately. Local prices have moved up, okay, and about 4 weeks back it was in the range of around 125 rupees per kg. So as we speak, it is around 133 rupees per kg. So that is in the local market. I'm referring to Kerala. So the recent spike in the prices of natural rubber is partially on account of supply issues in Kerala. As far as international prices are concerned, it's been range bound for last few months. It's been in the range of about $14-50 plus or minus $50. I'm using block rubber as the reference. So we expect the prices to be range bound in the next 2 to 3 months. Okay.
Good to know that. Sir, on the last time when we spoke, we were talking about how really carbon black shortages are impacting the industry. As of now, what is the situation? Have other raw materials like carbon black and other crude derivatives which are used for tire making have seen improvement in supply and slight softness in prices versus the peak that we saw a few months back?
See, we did not have any problems with other crude derivatives, okay, like say synthetic rubber or fabric. Okay, the supply was tight in carbon black. Now that has improved. Availability of carbon black has improved in the last 2 months or so. As far as the prices are concerned, since these are linked to crude oil prices, okay, generally the prices of synthetic rubber, carbon black and fabric, they have moved in line with crude oil prices. And in addition to that, the recent depreciation in Indian rupee vis-a-vis dollar has also impacted the delivered cost of these materials to the extent of imports, as well as if there is a reference to import price.
Okay. Sir, Ceat has been a market leader in the two-wheeler space. We have seen robust growth in the two-wheeler space, given the fact that the rural markets have been driving demand. So when it comes to Ceat, how really are you looking at market share? How is really the replacement market shaping up? And do you expect the OEM's order book to be robust ahead of the festive season that we are looking at? And if you could just give us the market share trends currently for Ceat.
Okay, we have a strong player in two-wheelers, right, okay, and we continue to focus on that particular category. And the demand has been good in the last 2 to 3 months or so, both in motorcycle as well as in scooter category of tires. We maintain a reasonable ratio between original equipment manufacturers and replacement market. We have seen that growth in both the business units, that is OEMs as well as in replacement market. We expect the market to grow in the next couple of quarters too, based on our current understanding of the market.
And in terms of some market share for Ceat, are you still in the leadership position, and would you be able to maintain it, because a lot of competition is also expanding capacities? So in that scenario, how really are you looking at protecting your market share and expanding further via some capex plans?
See, we are a strong player in two-wheeler. We are not the market leaders. Okay, we are a strong player, maybe among top two. With respect to your question on capex, as you would know, we had put up our own plant at Nagpur to produce two-wheeler tires. It commissioned production in 2016. We are working for additional capacity expansion in that particular facility based on our long-term demand plan. So we'll add appropriate capacities in the coming year based on our long-term demand plan projections.
Okay. And sir, one final question for the trucks and the car segment. How really is the demand shaping up there? And what kind of a capital expenditure you are planning for this particular segment, so that the demand which is coming in from the market, especially from the commercial vehicle segment, you are able to meet it, and also for the future requirements of such OEMs?
Okay. See, we are currently not unable to meet the demand of truck and bus radials. So as we had shared with you earlier, our new capacity is going to be commissioned in Q3 of the current financial year, okay, at Halol, where we are likely to incur approximately about 1,000 crores of capex for capacity expansion. As regards your second question on passenger car, okay, we are setting up a greenfield plant in the southern part of India, where we have estimated our capex to be close to about 2,000 crores over a period of time. We have already started the project activities at our greenfield site, and truck and bus radial, we expect the plant to be commissioned in Q3 of the financial year. So we have geared up to meet the demand in both the categories through capacity expansions.
Okay. And sir, further to this, since you are spending 2,000 crores on the truck side and almost 1,000 crores on the passenger vehicle side, nearly 3,000 crores is what you intend to spend on capex. So will it come in from internal accruals, or are you raising debt? And if you are raising some debt, how will the debt to equity look by the end of this financial year, FY19?
Okay, a small correction, 1,000 crores is on truck and bus radials, and 2,000 crores is in passenger car radials. Okay, and this 3,000 crores of capex in these two categories would be spent in phases, okay, depending on our demand. It will be funded through internal accruals and debt. Okay, our plan is to do 1/3 of it from internal accruals and 2/3 of it through borrowings. That is our internal plan at this point in time.
And sir, how will the debt to equity look at the end of FY19? Is it something that will be in your projection limits?
Okay, difficult to estimate, but I'll give you some numbers. Okay. And as of March 2018, our debt equity was about 0.33. Okay, and we improved it to about 0.28, 0.29 as of end June. Okay, and we expect our total capex for the current year to be in the range of about 1,500 to 1,700 crores. Okay, this excluding our specialty categories. So if we spend all of that money, our debt equity ratio could move up, okay, and maybe to around 0.8, 0.7, 0.8 if we spend all of that money. But I would still like to wait and watch in terms of whether we would reach that level, depending on how much we spend in the next 2 quarters.
Okay, Mr. Kumar, we leave it at that, and thank you so much for giving us those insights on Ceat. So that was the management of Ceat. Strong capital expenditure is planned in the passenger vehicle segment as well as in the commercial vehicle segment, and they hope to grow the two-wheeler tire segment given the fact that the demand in the marketplace looks buoyant.